Hey, it's Clay, and this will be a video chart on ticker symbol RAD. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to do this time frame, and it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Did this analysis on Friday, so that is where the green and red line annotations are coming from. But after today's price movement, definitely some updates here should be made here. The first update comes about based on a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So for those of you that did watch the video from last week, hopefully you remember me talking about 95 cents as that area of support. But this morning, the price was not able to hold up above it. So therefore, that would now be considered an area of resistance, short-term level. The good news is, assuming there's no gap downs or anything, on Wednesday, the price does not have to travel up that far before it can start to do battle with it and hopefully get back up above it. But, before we start talking about doing battle with 98 cents up here, the bulls first need to now prove themselves in the short run. And I'm quantifying, quote unquote, prove themselves again as not only getting up above 95 cents, but then being able to stay up above it. Case in point right here. Yeah, the price was able to get up above it, but as far as staying up above it, the price couldn't quite do it. So it's kind of a two-step process. Got to get above an area and then stay above it. So that's going to be that near-term level at 95, and yeah, up there at 98 cents. As far as levels of support are concerned, you have this purple line here, the 50-period simple moving average, which is sloping nicely upwards. There we go. So that'll be the near-term level to keep an eye on. Right now, valued at 92 cents, but again, it is a moving average, so that value will change over time. But that's the initial area to keep an eye on. And then if that level does not hold, the 90 cents is more so the important level. I'm not saying the chart is destroyed if the price were to go down there and break below 90 cents and continue to separate. But, the chart would start to look a little bit shaky if something like that were to happen. Again, I'm not saying that's what's going to happen, but just that, 90 cents, I'm not going to call it quite a do or die or a must-hold level, but it's certainly a strong preferable level that you would want to see the price stay above if this pullback does continue. All in all, though, the overall chart is still bullish, still plenty of opportunity to build a higher base. So let's see if the bulls can get that job done or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.